All right, and welcome everyone. I think you've already heard the message that as you arrive, please share your information in the chat. Most of you have already done this, your name, where you're from, what type of insurance you're most interested in learning about. And then we are going to move on from that point. So welcome to Preparing Your Insurance for Disaster Resilience. And we are very pleased to have you here. I think Sara had mentioned earlier, we had 60 some registered for today, and we usually expect 50 to 60% of the people that register to be with us live. So glad you are all here. For anyone that's not able to make it, of course, and for all of you as well, we will provide a recording after we have these. We now are able to do some closed captioning and to get the recordings closed captioned. So we will send those out as soon as we are able to do that. Just to let you know, this is one in a series of disaster preparation webinars from the University of Minnesota Extension. And at the end of the webinar, we'll be sharing those upcoming webinars so that if you aren't already registered, you can do so. And today we are very pleased to have some insurance experts with us. They might say, oh, we're not experts, but they certainly do know an awful lot. And so we're pleased to have Bryden from the Department of Commerce, and also James Sink, who is a regional flood insurance liaison, and they are going to share their expertise with us. I am Lori Hendrickson. I'm an extension educator out of the Grand Rapids, Minnesota Regional Extension Office. And Sara Croymans is also with me, and we will be facilitating the webinar as we go along. Sara is out of the Morris Regional Office. And to get us started and thinking about things today, we would like to know, we're going to launch a poll for you here, and we would like to know, why are you participating in today's webinar? Are you doing this for personal use, for professional use, or like some of us, a little bit of both? Gain some personal knowledge as well as some professional knowledge. We'll give it just a minute more here. Get a few more in here if we can. Give you a little bit more chance if you haven't already responded to the poll. All right, we'll go ahead and end that poll. And we will see that most of you are doing this for both personal and professional reasons. It's always nice to get a little personal knowledge as well as be able to share it professionally. So that's great. We always like to know what people are intending to do. So, all right, that's great. Thanks for participating. And we want to just kind of set the stage here a little bit for you and think about how we handle risk or loss, and perhaps thinking about ways to handle our risk or loss will kind of help, as Dan and James talk about this information today, help you think through your willingness to handle risk. Are you risk adverse? Do you accept risk? Are you able to do that? Do you feel comfortable doing that? And so let's take a look at some of these strategies. If you were, let's say, thinking about home ownership or home insurance, one way to avoid risk is maybe you wouldn't own a home. You would rent instead, or perhaps share a house with somebody that you were not the owner of. Next one, you might retain the risk. You would maintain the condition of your home. You might control your loss by putting locks on the windows and doors. And there's another piece to this, of course, is using them, actually locking things. You might transfer risk, which is buying insurance, sharing that risk among others. And lastly, reducing the risk buy insurance with maybe some limited coverage. So maybe not spending as much as you potentially could, but buying insurance with limited coverage. So that kind of helps you to think about risk, and you can think about that throughout the presentations and see where you're at related to your risk, your ability to take on risk, or your comfortability with risk. And at this time, I'm going to turn the program over to Dan, who will give us an overview of insurance. Dan?
Hi, everybody. Thanks for setting it up, Lori. Why don't we go to the first slide, or the next slide? So I wanted to just do a quick introduction to the Minnesota Department of Commerce, which I'm a director at the Minnesota Department of Commerce. And we are a state agency. We're an executive branch state agency who ultimately reports to the governor. And we are the primary regulator of insurance in the state of Minnesota. And insurance is one of the most highly regulated industries in pretty much every state. And what that means is that insurance companies can't sell insurance in Minnesota without being licensed by us. Individuals who want to sell insurance can't sell insurance unless they're licensed with us. The actual policies themselves are filed with the department. Although we don't necessarily do an in-depth review and read every word of every single policy, but there are certain ones that we do close reviews on. And then also the rates in terms of how much different insurance companies are going to charge their customers. They also file those rates with us. And then there's also enforcement, which is that there are a lot of different statutes for different types of insurance. It gets very complex very quickly if you start trying to figure out what all the different statutes are that apply to different types of insurance in Minnesota. And I'm part of the enforcement division. And what we do generally with all the industries we regulate, and it's not just insurance, is we just try to do everything we can to ensure that the companies and the agents are complying with all the Minnesota laws. And now, specific to my role in the Department of Commerce, one of the teams I manage is called the Consumer Services Center. And we are basically the folks who take complaints about insurance companies from the public. So if you call that 1600 number, and there's a phone tree that you have to navigate through, but if you navigate through it saying, I want to talk to somebody about insurance, or I have a complaint about insurance, you will wind up on a team called the Consumer Services Center. We literally get thousands of telephone calls and written complaints every year from people who have one issue or another with their insurance, whether it's a claim being denied, a policy being canceled, a rate that they think is too high. So a lot of different issues, and that's every type of insurance: health insurance, homeowners insurance, auto insurance, long-term care insurance, pretty much every single type of insurance. There are some health plans that are regulated at the federal level, but we regulate a lot of the health plans in Minnesota and have primary jurisdiction over most of the other types of insurance. Here's an email address that you also email us. And then this is a URL if you actually wanted to file a complaint with us. And we can, share that information after the presentation. If there's people that want this slide or need this information, happy to share with you. All right, let's go to the next one. So, and this kind of goes back to what Lori was saying at the outset, which is that, there are lots of different types of insurance you can buy. There are lots of supplements you can buy to your homeowners, or additional liability coverage you can get on your auto. And it would be great if everybody had all the insurance you could possibly buy and all the different policies, but that's, not really financially doable for most people. And so you have to make decisions about, well, how much can I afford and how much risk am I willing to tolerate? Do I really need to buy every single different type of insurance that I can? Or are there ones that I should skip? And so the decision about what to buy, how much to buy, is an individualized decision that should be based on your personal financial situation, which is why I recommend working with an insurance agent, because they can take a global view of all the different types of insurance and a global view of what the different products are that you could purchase, and can work with you to put together a plan that makes sense given your financial situation. And as I mentioned earlier, insurance agents in Minnesota are licensed by the department. You can check to make sure that whoever you're dealing with is licensed by the department, and you should do that before you use somebody as an insurance agent. And I know one of the questions we got before the class began was, what's the best way to compare rates for different types of products across different insurance companies? And that's another one where I would recommend talking to an agent. And you may need to talk to an agent who is what we call an independent agent. There are some insurance agents that just sell insurance for one company. Like, you may have an agent who's a State Farm agent and they sell State Farm insurance, and they may not be able to sell you insurance for a different company. If you want somebody who can, compare prices and compare coverages, you may want to talk to an independent agent. There are things online where you can get quotes and compare them. I would just exercise a lot of caution. There's a lot of fraud that goes on the internet sometimes, especially if you're being asked to provide personal information in order to get an insurance quote. I would just be very cautious. My humble suggestion is talk to a real person, call an insurance agent. All right, let's go on to the next one. So is this a chat? So we'll let people chime in on this one.
Yeah, go ahead and use the chat box and share what are some things that you can do to help you make decisions about what insurance to purchase and how much coverage to have. And Dan gave us some ideas, but let's go ahead and use the chat and see if there's some additional thoughts.
Mm-hmm.
Yep, know the value of your home, how much debt my estate would have to settle. Yeah, so having knowledge of those things. What else might be good to do or know?
Well, one thing that would be a good place to start would also be to just know what your coverage is. Not everybody knows what the limits of their coverage is. For example, on your automobile, do you know what the cap is on your liability coverage? A lot of people don't. And do you know that you can purchase a higher liability coverage? How much risk are you willing to take on? If you get in a car accident and somebody's got a new truck that you total, is your $25,000 cap on your liability coverage going to be enough? So that's another thing to think about.
Good idea, Shirley, to list priorities, right? What's most important to you? And Sarah, your idea is excellent of checking on benefits through your employer to see what else you might want to add, because sometimes employers may have a disability policy, they may have a small life insurance policy. What does your employer offer? That's really important. Great, thanks for sharing, folks. Whoops, we'll go there.
All right, great. So I've listed on here just some common issues that I've seen in my capacity as the manager of the Consumer Services Center. So these are the types of issues that consumers have and that they're surprised by or upset when they find out that there's a issue with their coverage. And And here we're talking about homeowners. One issue that I think if you're reviewing your insurance coverage that you should think about and take a look at in your policy is, do you have an actual cash value policy, or do you have a replacement cost policy? So actual cash is actually a significantly lower coverage amount for certain types of damage. And I'll give you the example, and this is a common issue that people have after a storm. So you have roof damage, and it was a hailstorm, windstorm. You need to get a new roof because there's significant damage. If your coverage is an actual cash value coverage, you're likely to not get the full amount that you would need to replace your roof, because what they're going to give you is what your roof was worth. And if you're like a lot of people, you may have put your roof on the last time the shingles were replaced was 20 years ago, and the life of those shingles is 30 years. And so the insurance company will tell you that, 2/3 of the life of those shingles has already been used. And so the cash value of your roof is really 1/3 of what a new roof would be. And some people don't understand that. And this particularly happens for folks who really bargain shopped for their homeowners insurance. Is sometimes how this comes up. People who are super price sensitive and they just wanted the cheapest homeowners policy they could find. Sometimes they are sold a policy that is an actual cash value policy, and they don't understand that, and then they have a catastrophic loss, and then they find out what that means, and they didn't understand that before they bought it. Now replacement cost is what it sounds like. If you have replacement cost coverage, as long as there are no other coverage issues, you should get the full cost of replacing the roof. For example, if the insurance company agrees, you've got a total loss on your roof. So that's one thing that you ought to look at if you're going to review your insurance coverage. Another issue that comes up is what we call matching. And so this actually happens more often than you might guess. But so again, this is, after a storm, if, for example, the siding on your house is damaged, but you just have maybe the front side of your house got hit by hail as it was blowing in from the south or whatever it might have been. But the back side of your house does not have damage to the siding. And so you come in and the insurance company says, well, okay, we'll replace the siding on the front of your house. But then they go into the market and they find, well, you bought this siding 20 years ago, and actually your manufacturer either is out of business or they don't have that same color anymore. And so then they say, well, so the best we can do is get as close a match as we can. But for some homeowners, if it isn't a perfect match in terms of color, they feel like, well, I got to get a whole new siding on my whole house because the colors don't match. And actually in your typical homeowners, you don't get matching coverage. There's a little bit of a public misconception about that. We get a lot of people that call us and say, hey, I thought in Minnesota, every insurance company had to provide matching coverage. That's actually not true. You may have it in your policy, but for a lot of companies, you got to buy an extra rider to get that coverage, and it'll be an extra $20 a month or something like that. So that's something worth taking a look at when you review your coverage. Another thing that you probably are going to have to get additional coverage for is what they call the sump pump. And so this is a pump that's in your plumbing that's it's supposed to prevent overflows in your plumbing system, but sometimes the sump pump malfunctions or it breaks, and then you can get flooding in your basement, which can cause a lot of damage and be an expensive repair. A lot of homeowners policies specifically exclude coverage for that type of event, but you can purchase it separately. And again, for another $20 a month or something like that, you can have sump pump coverage. And so I recommend taking a look at that. Other items that there may be caps if you have things like jewelry or art, there may be caps in your policy that say, you know, we only cover up to $2,000 of jewelry. And so if you have expensive jewelry or more than $2,000, you may need to pay a little extra to get all that covered and then schedule it. And I do recommend making an inventory of all your personal items. I have seen it happen where somebody has a catastrophic loss like a fire, and it's very difficult for them to reconstruct what are all the items that were lost in the fire. And if you start saying, well, I had all these really expensive, nice items, the insurance company is going to ask, what proof do you have that you had those things and what their value was? And if you can't prove it, you might have a problem. All right, let's go to the next one. When do you guys need me to stop to hand off to James? Do you want me to stop at 2:30? Does that make sense? Okay. All right. So I will, I think I just have 5 or 6 more slides, but we want to get over to James and FEMA too. So this, and one of the big things that James is going to be addressing is flood insurance. And this is something you just need to be aware of that not everybody knows, is that flooding is not covered in your standard homeowners policy. It's just not a covered peril. It's specifically excluded from your homeowners policy. And so if you have a flood as it's defined in the policy, you will get zero coverage. And of course, a flood can be a total loss or close to a total loss on your home. It can be a catastrophic loss. And so you typically have to buy a separate policy that's flood insurance, and James is going to talk about that. There are other types of water damage that you should be aware of that are also, or sometimes generally excluded. One of them is when you have a gradual intrusion of water, that is typically excluded. And so if there's, again, just like a leak somewhere in your house, or maybe there's somewhere in your house where the siding has come apart a little bit or the shingles have come apart, and over the years, there's kind of a gradual intrusion of water, that is typically not going to be covered, and there typically is not some sort of rider you can purchase to cover that. And so I think what that means for those of you that are homeowners is that you should be vigilant about making sure that you don't have those types of potential issues in your home. You know, some people, I know people I work with who have worked in the insurance industry for a long time, that for their personal home, they a couple times a year, they do a walk around on their house and even go up on the roof and just take a look at, are there areas where water could be getting into my house? And if there are, get out the caulk and fix them up. Make sure that there isn't a chance for that, because there's a good chance that that's not going to be covered by your homeowner's insurance. And I've seen cases where there's $40,000, $50,000 in damage from a gradual water intrusion, and there's zero insurance coverage for it. So certainly something to be aware of. Ice dams kind of fall potentially into a gray area, but an ice dam in some instances could be a gradual intrusion of water. In other instances, it might be something that's more associated with a specific storm, and then it's more likely that it will be covered. But certainly ice dams, or when you get the big icicles coming off the house and jamming up your gutters, you can, that ice can force, when it melts, it can force some of that water up under the shingles, and you may or may not have coverage for that. There are things you can do to prevent ice dams that you might want to take a look at. All right, let's go to the next one. Renters insurance and condominium insurance. So go ahead to the next one. Oh, I'm sorry. Was there a condo one right before this? Yeah, why don't we do that one? And I'll try to cover this quickly. I don't know how many people we have with condominiums and townhomes. But one of the potential pitfalls that you have to be aware of if you have condominium or townhome insurance is that there are two different insurance policies that might cover any particular loss. So the condominium or the townhome has a policy that covers the building, covers the outside of the building, and then some portion of the walls. And then the people who own the condos and townhomes have their individual policy, which is going to cover just their unit. And so you need to take a look at, when you're purchasing your own individual coverage, your loss assessment, because usually in a townhome or condominium association, if there's a big loss to the building, they then can assess whatever wasn't covered by insurance. And some of the building policies have high deductibles. They can assess that then on the individual unit owners, but your personal insurance for your own unit may cover that, or at least a portion of it. But you need to understand how those interact. And I also encourage you to be very careful if you have condominium or townhome insurance. If you decide to switch to a different company, you have to be super careful, because different companies, different policies have different events that will trigger coverage. And so in some townhome or condominium policies, it's the date of loss, meaning the date that the storm occurred or whatever other damage occurred. On other policies, it's the date of the assessment, which is the date that you get notice from the association that they're going to assess you to pay for part of the loss. And I've seen it happen where there's a date of loss, people have a policy that says we cover any assessment from the date of assessment, and then the year ends and they switch to a new policy, and the new policy they buy is based on the date of loss. And even though they've been continuously insured the whole time, they have no coverage for the loss assessment. Now, I know that's a little bit in the weeds. Feel free to talk to me if you want to reach out later, and you might have a problem with that. But I've seen people who had zero coverage because they switched policies and they had different triggering events. All right, let's go to the next one. Renter's insurance. This is something that's generally not required when you rent a residential space like an apartment, but it's usually really inexpensive. And it's got, personal property and liability, which are nice. One of the nice features I like about it is the temporary living expenses. If you're thinking about preparedness for disasters, that means that if you're in an apartment that gets flooded because of a natural disaster, they will pay to set you up in a new place until you're able to find appropriate housing. And so I think that's a nice feature for disaster preparedness. Let's go on to the next one. Automobile. I'll just flag one quick issue as I wrap it up here. That not everybody knows is that if you're an Uber driver, if you are delivering food for, which a lot of people are doing on the side these days, you might not be covered under your automobile insurance while you're engaged in those activities, because it's considered a commercial activity. And a lot of automobile policies say we don't cover commercial activities. And so you're going to want to talk to your insurance company if you're engaged in those activities about how to get covered in those types of activities. I think I have one more, and then I'll hand it off to James here. I'll just make a quick comment about a lot of the other types of insurance, and this goes back to what Lori was saying and what I was saying at the beginning. Life insurance, disability insurance, long-term care. There's also umbrella insurance, which is usually kind of a liability umbrella. It'd be great if everybody had all those different insurances, but some of them get expensive. Particularly long-term care insurance is pretty expensive these days. And so again, whether or not to purchase those types of insurance is in a lot of ways kind of a long-term financial planning issue. And in addition to insurance agents, another industry that we regulate are investment advisors and financial advisors. And those are also professionals who may have thoughts in terms of whether it makes sense for you to spend the money to buy those types of policies. I think that's all I got. We can go on to the next slide. Happy to answer questions, but want to leave James enough time to cover his material too.
What we can do is take some questions in the chat area.
Mm-hmm.
And then we'll go ahead and at the end, we'll try to answer those.
Okay, sounds good.
Okay, while we're next slide deck pulled up here, why don't you all go ahead and type in the chat box about a flood event that has occurred in your neck of the woods, something that's memorable to you. I've always been interested in emergency management for as long as I can remember, but for me, I really remember the 1997 floods in the Red River Valley. Like that was a formative experience. I remember packing up our parakeets into a little shoebox and getting on a Greyhound bus and, you know, going to my grandparents' house for I think it was a month and a half before we had running water and electricity again. So tell me a little bit about what your experience with flooding has been. But my name is James Sink. I am the FEMA Region 5 Flood Insurance Liaison. Basically, any questions you have about flood insurance, I can help with. Flood insurance is a bit weird. The Minnesota Department of Commerce does not regulate the flood insurance product, but they do regulate the individual agents and the agencies. So if you have an issue with the insurance product, you'll want to come to me because it's a federal program. But if you have an issue with an agent or the agency, then that would be something that the Minnesota Department of Commerce would deal with. So let's talk a little bit about what the National Flood Insurance Program is. So the National Flood Insurance Program was created in 1968 by Congress to reduce the cost of flood disasters and the impacts on life and property. What Congress had realized at the time is that a lot of private insurers were not making flood insurance available, or if it was available, they were starting to discontinue those products. And the reason being that it's really difficult to, especially in the 1960s, to understand flood risk and do the underwriting on that in a way that's sustainable for the private insurance industry. These days that's changing and we're seeing more and more private insurance products, but the National Flood Insurance Program is still here and we still hold the bulk of flood insurance policies. It's important to know that the National Flood Insurance Program is voluntary. What does that mean? That means that your local community has to agree to enforce certain floodplain management regulations. And if they do that, then the federal government makes federally backed flood insurance available in that community. So your community has to volunteer to participate in order for flood insurance to be available. Oftentimes people think of the National Flood Insurance Program as a three-legged stool made up of floodplain management, which are those local building regulations we talked about, flood insurance, which is what we're talking about today, and then mapping, where we map actual flood risk within communities. Let's go to the next slide. No one has any flood stories. I'm very disappointed. So who can sell flood insurance? Basically is any state licensed insurance agent, broker, or carrier who can write property and casualty policies that are in good standing with their state licensing authority and have completed certain mandatory training requirements. Something that often confuses people is the difference between NFIP Direct and the Write Your Own program. What NFIP Direct is when an individual insurance agent contracts with FEMA to write flood insurance policies that we underwrite. The Write Your Own program is when an insurance company contracts with FEMA. And what that means is that they're writing those policies in their own name. They're handling the claims and the premiums and all that stuff, but they're following our underwriting rules. And if there's an issue, like we work it out with that insurance company. It does not matter if you get your flood insurance from NFIP Direct or a company writing national flood insurance policies in their own name. They're all part of the National Flood Insurance Program. They follow the same underwriting rules. premiums for an individual home or structure are going to be the same from agent to agent or company to company. Claims are all handled the same way. So that is an area of confusion, but it doesn't much matter. They're all NFIP policies. Let's go ahead and go on to the next one. So let's talk about the cost of flooding. Flood insurance is often thought of as being relatively expensive. If we look at flood insurance policies across the nation, so on the left-hand side, they're under all policies, the average cost of flood insurance is $876 a year. There is a particular type of flood insurance called a preferred risk policy. Those are for people who are considered at low to moderate risk of flooding. Those are available at about $504 a year. And people who are in high risk areas, that flood insurance tends to be more expensive. Like any other insurance product, your premium is based off of your risk. So people in high risk areas nationally pay about $1,600 a year. When we look in Minnesota, we see those average across the board single family policies about $731 a year. Those preferred risk policies for single family homes, again, about $440 a year. And then when we're looking at people in high risk areas, it's about $1,400 a year. Overall, flood insurance is cheaper in Minnesota. And the reason for that is that Minnesotans are really good at buying flood insurance when it's voluntary. Across the nation, we usually see people purchasing flood insurance when they're required to do so as a condition of a mortgage. But in Minnesota, people are really good at buying flood insurance when they're in those low to moderate risk zones when flood insurance is in fact voluntary. But people often ask, why would I want to buy flood insurance if FEMA is just going to come write a check, right, if there's a flood disaster? The fact is that very few flood disasters receive any kind of a federal disaster declaration. When we're talking about a federal disaster declaration, there's two different kinds. There's public assistance, which is for public infrastructure, police overtime, debris removal, sandbagging, that kind of stuff. So there's public assistance, and that's the vast majority of disaster declarations. On the other side, we have individual assistance, and that's when we can offer help directly to an individual homeowner or renter, and those are incredibly rare. And it's important to know that in those rare circumstances when FEMA can offer direct assistance to individual homeowners and renters, that assistance is only intended to make the home safe, sanitary, and functional. It is not intended to build your home back to the way it was before it was flooded. It's not intended to restore your home to the pre-disaster condition. It's intended just to make it good enough for you to live in. So what you'll see on this slide here is some comparison between what individual assistance pays versus flood insurance. So if we look to the 2018 flooding in Wisconsin, individual assistance on average paid $4,300. Flood insurance, on the other hand, paid over $46,000. In the most recent dam failures in Michigan, individual assistance paid a little more than $10,000 on average, but flood insurance paid over $65,000 on average. So post-disaster, people who have flood insurance are much better situated to recover more quickly and more holistically. Let's go to the next slide. So let's look a little more specifically in Minnesota. The average grant for the individual and household program, again, disaster assistance, it's $4,600. The average flood insurance claim is $15,000. And the reason it has an asterisk behind that is because the computer system that I used to pull the data was not working, but I was able to do it just before this, and the average claim in Minnesota is $15,008. So I was pretty darn close. But again, we can see here, people who have flood insurance, again, better situated post-disaster to start the recovery process. And on top of that, if we're waiting for disaster declarations, you need to wait for that bureaucratic process to play out, right? You got to wait for the local government to complete their damage assessment. You got to wait for the state to sign off on it. You got to wait for FEMA to sign off on it. Then you got to wait for Department of Homeland Security to sign off on it. And then the president signs off on it. So it can take months. You know, using Michigan again as an example, the flooding there happened in March. That dam failure happened. No, I'm mistaken on that. May. The flooding there happened in May, and the disaster declaration wasn't approved until almost the end of July. So there's a 2-month period there if you're waiting for disaster assistance where there's no help. Whereas if you have flood insurance, we were paying claims within, 72 hours of the flood event. So again, recover more quickly, recover more holistically. Let's go on to the next slide. So we have a poll question here, myth or fact, disaster assistance will make me whole. We'll pull that poll question up here shortly. Yeah, I'll give people a couple more seconds here to finish answering, but what I see is the vast majority of you are right. That is exactly true. Disaster assistance, I certainly made that confusing, didn't I? Disaster assistance is not intended to make you whole. It's solely intended to make the home safe, sanitary, and functional. It's not intended to restore it to the pre-disaster condition. So it's very important to know. We can go on to the next slide. And on the next slide, we are just kind of re-emphasizing about that fact, right? As little as one. Oh, sorry, go ahead, Lori.
James, I was just going to say, we have a couple of other myths and facts here if you want to do them.
Yeah, we can go ahead. They're all on a roll here, right? Yeah. Okay.
Yeah. I'll just keep on scrolling through them.
Sure. And then we'll go ahead and talk more about these when we get to that point. So the second one here is a myth or fact. You can't buy flood insurance if your property has flooded before. And I think most people are on the right track with this one, and it's not something we've talked about yet. So the National Flood Insurance Program, you can write flood insurance, you can have a flood insurance policy even if your home has flooded before. In general, we do not look at loss history when setting premiums. There's a very small subset of properties who flood over and over and over and over again. Those are called severe repetitive loss properties. In those ones, we do look at their loss history when setting their premium, but by and large, we do not. The next one here is myth or fact. Homeowners and business insurance does not normally cover flood damage, and Dan spoke to this. Yeah, so this is true. Homeowners insurance and business insurance typically do not cover flooding. There are always exceptions to the rule. So back to what Dan was saying, it's very important you're having those individual conversations with your insurance agent to understand your coverages. But by and large, those items are not, flooding is not going to be covered by either homeowners or business insurance. Okay, and the last one I think that we have here is a myth or fact. You can only buy flood insurance if you live in a high-risk flood zone. And we haven't talked about this one in depth yet, but I did kind of refer to it. So it'd be interesting to see how people answer this one. It looks like most of you are spot on. You can buy flood insurance no matter where you live, as long as you're in a participating community. It does not matter if you're in a high-risk zone, a low-risk zone, a moderate zone, anywhere. As long as you're in that participating community, you can buy flood insurance. Does that wrap up all of our polls here? I think so. Oh, got another one here. Okay, so this one we're going to be talking about towards the end. But is this true or false? True or false? Myth or fact? If a water main breaks and water flows across the street into your house, flood insurance has you covered. Myth or fact? This is a tricky one. So if that water main breaks and the water comes up onto the street and into your house, is that a flood? I don't know. I think that's almost everyone. Yeah. So this one is really kind of interesting. That in fact would be considered a flood, and flood insurance would cover that. We'll talk about that towards the end here. I'll try to Let's fit that in here. Let's see. Does that wrap us up, Lori? Okay. So let's go ahead and talk about these flood insurance rate maps. Basically, this is how we set premiums. On the right-hand side there, that black and white one, that's a old flood insurance map. They're not super detailed. It can be really hard to find out where your property is, what flood zone you're in. So we've moved away from those to what you see on the left there, which is a modern flood insurance rate map. Linda, I think you're from Moorhead, is that right? This is North Moorhead, where I used to own my house. So I could point my house right out to you. But what we see here in this map, and I like to use this one because it's a good example, you see multiple different flood zones. And this illustrates that it doesn't matter what zone you live in, you can still get flood insurance. You see in the blue, a special flood hazard area, a high risk zone. You see in orange, the 500-year floodplain or a moderate risk zone, and the spots that aren't colored, they're outside of a high risk zone. So anyone in this neighborhood can buy flood insurance. Their premium is going to vary based on their risk as determined by that flood map. Let's go to the next slide. If you have questions about flood maps, you'll want to visit the Map Service Center or give them a call. We're sharing the slide deck, so you'll be able to see that when you get a copy of the slides. We can go on to the next one. Again, very important. This is the #1 myth that I hear post-flood and when I talk to insurance agents. Anyone in a participating community can buy flood insurance. And if you learn one thing today from me, that is what I hope you learn. It doesn't matter if you're in a high-risk zone, you can buy flood insurance. And you should. In Minnesota, 50% of flood insurance claims come from areas that are considered low risk. So everyone should really be having those individual conversations with their agents, making sure that they have the insurance products they need to protect the lives that they've built. If you want to know if your community is participating, you can call your local floodplain administrator. They'll be able to tell you, or you can look at the community status book. The link is on the slide there. There are some exceptions to where flood insurance is available. There's something called the Coastal Barrier Resources Act that defines certain places where flood insurance is not available. There are some places in Minnesota that are identified as Coastal Barrier Resources Act areas. Again, you're getting a copy of the slide deck. You can read more about this later. But if you have questions and if you live in one of those areas, please ask me. Send me an email because those are very nuanced and complicated situations. So I don't want to make a blanket statement. If you're in that situation, let me know. If you buy flood insurance, important to know as we head into the spring flood season, there is a 30-day waiting period. So if you go talk to your insurance agents today, buy flood insurance today, it's going to take 30 days for that policy to become effective. So you can't run out and buy flood insurance, the day that the river is flooding, because you have to wait 30 days. You really do need to be considering your flood risk now so that you can get through that 30-day waiting period for your flood insurance policy to become effective. Let's go to the next slide. We've covered the myth and fact, so we can skip the next two. And I think we can skip the video.
You've worked hard and finally have
premiums.
everything
I'll
in
just
your
talk
home
about
set up
these.
the way you wanted.
Yeah, so on the two slides where there's videos, we can skip those. Basically, flood insurance premiums are set based on your individual risk, how much coverage, and the type of structure that you live in. So if you live in a 1 to 4 family house and it's your primary residence and you're in a medium risk zone and you want $250,000 in building coverage, we'll use that to set your premium. It is not, there are again, exceptions to that rule when there are older homes. If you're in that situation, basically a home built before December 31st, 1974, let me know and we can talk about those individual situations. Those are our unique rating situations. Flood insurance, the standard flood insurance policy has 4 different coverages. And this is really important for when you're talking to your insurance agent and reviewing your coverages. There's coverage A, which is for the building, coverage B, which is for personal property or contents coverage. Coverage A and coverage B are separate policy items. There's a separate premium for each of those. So in order for you to have building coverage and personal property coverage, both of those items have to show up on your declaration page, and you have to be paying the premium for both of them. If your declaration page says only building coverage, then that's all you have. So you got to really carefully review that declaration page. Some other things that flood insurance pays for are things that are called loss avoidance measures. Those are like, sandbagging, or if you have advance notice of a flood, taking your personal property and moving it out of harm's way. There are limits to that amount of coverage, but that coverage is available. And Dan mentioned the condominium loss assessment. For people who live in condo buildings, of course, flood insurance would cover the loss assessment for flooding that the condo association might send to you. Coverage D, that one is probably one of my favorites. Coverage D is increased cost of compliance. What that does is if your home is in a high-risk flood zone and you are damaged by flooding to 50% or more of the value of your home, we will pay you to build your house back better. The method that is acceptable for building back better is up to your community. Remember your local floodplain management ordinance, but there is up to $30,000 of additional funding available through your flood insurance policy to flood-proof non-residential structures, relocate your home, elevate your home, or demolish it, again, depending on what those local communities require. I'm going to answer this question here. If there is a big rainstorm with flash flood in the street because drains are saturated and water enters my basement, would flood insurance cover that? That depends on how the water is getting into your basement. Flood insurance does not cover like ground saturation, water rising from like up through the dirt into the basement. But if the water flowed across the street, for example, and into the basement, then that is something that flood insurance would cover. Basement coverages are limited. When it comes to basements and flood insurance, we cover the foundation, for example, we cover water heaters and that kind of stuff, but we're not going to cover like carpet and
flood
and all that kind of stuff. So it depends on how the water got into the house, but if it flowed over the land and went into the basement, we would probably cover it. So again, this is generally what we'll cover and not cover. Let's talk about the things that are usually excluded. What do we mean by avoidable mold, moisture, and mildew damage? Well, by that we mean, let's say your home flooded and you just decided not to come back and clean it up because you didn't want to do it. In that case, we're not going to cover it, the mold, because you didn't come back and try to clean up, right? On the other hand, if there was an evacuation order, or if you were in the hospital, for example, and you couldn't physically do the cleanup, we're not going to penalize you for that. Dan mentioned additional or temporary living expenses. Flood insurance does not cover additional or temporary living expenses. So you'll want to look to either a different insurance product for that or disaster assistance if that's an option. We can go to the next slide. Policy limits are set by law. So most of you, I think, would be interested in the dwelling form that's residential. By law, we can offer no more than $250,000 in building coverage and no more than $100,000 in contents coverage. For general property, these are going to be oftentimes thought of as business policies. We also cover agricultural structures under the general property form. Fixed by law, again, $500,000 for building, $500,000 for contents. That last one there, our CBAP, those are our condominium association policies. Similar to Dan, those get very complicated very fast. So shoot me an email later and ask me if you're in that situation. We talked about, to some extent, the definition of flood. What's important here is that flooding has to be general. It has to affect 2 or more properties, or if you're in a rural area, 2 or more acres. It has to be temporary. There has to be a start date and an end date to the flooding. If those things happen, we probably have a flood that we're going to cover. The source of the water does not matter. So we can go to the next slide for more on that. So I used the example of a water main break, right? In this case, the water main broke. The water flooded the street in front of the house. And so that's one property. And then that water flowed over normally dry land into Sonia's house. So that's 2 properties, the street, which is city property, and then Sonia's property, that's 2 properties. We're gonna cover flooding in this case. It doesn't matter that it came from a water main break. We've met the definition of flood. We can go to the next slide. It's important to know that there are specific things excluded from flood insurance. Remember, it is flood insurance. It's not landslide insurance or erosion insurance or like sinkhole insurance. It's flood insurance. So there does need to be flooding and direct physical damage caused by flooding in order for us to pay a claim. If you're along Lake Superior and you have an erosion issue, please feel free to reach out to me individually and we can talk about that. Those are some very technical and sensitive conversations that we should have one-on-one. Filing a claim is like any other insurance product. Notify your insurance company or the claims department right away. Take pictures, video, show your damages, work with your adjuster, sign the proof of loss. This is something that trips people up. The proof of loss sounds scary. Once you sign that document, people think that they're not ever going to get any more money for their flood insurance claim. That is not true. You can have more than one proof of loss. So if you sign that proof of loss, and let's say your contractor's estimate was low and it ended up costing more, or let's say you discovered additional damages that you didn't see the first time around, you can always come back and ask for additional funding through your flood insurance policy. So don't let that proof of loss trip you up. Basically, all it says is, hey, insurance company, my house flooded on this day and time. I had this much damage. I have this much coverage. This is how much I think you should pay me. That's all it is. And you can always send in more than one. If there's disaster assistance available, you'll also want to register for disaster assistance. We can go to the next slide. Kind of a throwback to what Dan was talking about here. Flood insurance is not a valued policy. What does that mean? That means that let's say you have $250,000 in coverage and you were damaged by flooding. That does not mean that you're getting $250,000 automatically. We do not pay you that $250,000 policy limit just because an event happened. We pay for the direct physical loss caused by flooding, meaning that we will only pay you for what was damaged, right? Not that total coverage that's on the policy, but what was actually damaged, okay? It's also not a guaranteed replacement cost policy. That means that if you are underinsured, for example, if you are insured to less than 80% of the replacement cost for your primary 1 to 4 family house, if you're underinsured, you're gonna get actual cash value, which means that the cost to repair or replace minus depreciation. You wanna make sure that you're fully insured in order to be eligible for replacement cost. If you have other kinds of structures like businesses, for example, special rules apply. If you have a mobile home, special rules apply, and we can deal with those individual situations later on. This is the appeals process. Basically, what it boils down to is keep working with your insurance company. If you find more damages, let them know, document your loss, try to work it out with them. If you can't, you can appeal directly to FEMA. You have 60 days from the initial denial letter to start that appeal process. It has to be in writing, and you have to tell them specifically, what's in dispute and provide supporting evidence. And then if other issues, you can file a lawsuit 1 year from the date of loss. And I think that's the last thing we have other than OFIA. I'll just say really quickly here, if you have an issue with flood insurance, contact me here in the region. Office of the Flood Insurance Advocate is a resource, but you have to exhaust all the other options first. So contact me here and I'm sure we can work it out without having to go through them.
All right. Thank you, Dan and James. Oh, that was like super short time frame to cover all of this really in depth. We could probably do a couple months worth of webinars on insurance. But if we can have people share in the chat, what did you learn today and what's one action that you might take this week as a result of the webinar? Go ahead and put that in the chat while I go through the next couple slides super quick. We do do offer a certificate of participation. So if you need to document your participation, whether it be for professional development or licensure needs, let me know. My name and email are on the slide, and it'll also be in the follow-up email that you will receive. And so let me know if you need a certificate, and we'll get that sent out to you. We also ask you to take just a few minutes and share your feedback on the webinar today. And so there is the link on the slide, and Lori, I think is going to she did just put that in the chat. It'll take you just a minute to respond to this survey, and that will help us with future webinars. And if you think we should have a series of webinars on insurance, let us know what you think that might look like. We do encourage folks to engage with us, the Extension Center for Family Development, Facebook, Instagram, Pinterest, Twitter, and YouTube. Definitely check those out. And then we do have a website as well. This webinar, as Lori indicated, was part of our disaster preparedness series. Our next webinar in this series on the upper right-hand corner is on February 17th on organizing your important papers. A couple of our colleagues in health and nutrition will be talking about food for your family pre and post disaster. And then on March 30th, we have a fun webinar designed for youth grades 3 and above and their adult, whoever that might be, to look at make a plan, build a kit, and prepare your family for disaster. On the left-hand side, you will see information on our Finding Balance series, and then the bottom right, we have some webinars in Spanish, and we will share these in our follow-up email as well. So if folks have any final questions, we will be hanging out here and we can respond to those, but thank you everyone for joining us today and participating in this webinar. And I see some folks have indicated they're going to be taking some action, right? Visiting with their agents. Yep, looking at the difference between cash and actual value. So thank you for sharing those. And again, if you have any questions, definitely put those in the chat or watch for that email follow-up, and we'll have both Dan and James's contact information in that follow-up email. Thank you, everyone.
Thank you.
Yeah, thanks, everyone.